Okay, hi everyone. Hope you're good and you enjoyed the first video. Like I said, you're more than welcome to comment. Don't forget to subscribe and like the videos, please. So if you do need any extra tutorials or help in terms of like one-on-one lessons, you can just drop me an email. Okay, so we're going to focus on residency in this case, right? So it's very important that this should be an if told situation. So the examiner needs to explicitly tell you if they require you to assess whether this person is a natural person or not, right? But if you're not, if you're told that this person is a resident or is a non-resident, there's no need for you to go in depth in figuring out which case law applies on whether or not the PPT test applies. Okay, so if they're telling you this person is a resident, take it as at face value. If this person is a non-resident, also take that at face value. If they're silent, they will explicitly ask for you to assess whether this person is a resident of this country. So since we're in South Africa, they should always be a resident of the Republic of South Africa, right? So the case law is applicable in whether or not a person is ordinarily resident, right? Then we need to look at the Cuttle case as well as the Cohen case, right? And the main thing is, or the main principle is you knowing that for Cuttle, the person needs to return to the real home, and Cohen, they need to return to from their wanderings. So they need to return to that place of residence from wherever they have been in the world, right? Um, I think that's what I needed to say here. Cool. And then with residency, we also have the PPT test, where maybe they don't necessarily meet ordinarily resident. Now we need to look at the physical presence test so that they can be resident, right? And 90-day or 91-day rule means that this person has to be in the country for more than 91 days in the current year of assessment, as well in the 5 prior years of assessment. So what does the 5 prior years of assessment? Since 2026 is our current year, they need to be here for 90 more than 91 days. So 92 is sufficient, right? But also they need to meet this rule for 2025, 2024, 23, 22, and 21, right? And here they also need to make sure that in those 5 prior years of assessment, which is our 25, 24, 23, 22, and 21, they need to have been present in the Republic for more than 915 days, right? So please remember that this is an N test, it's not an O test. So immediately when one is requirement is not met, you can just shut it down, right? Say for example, if they weren't here for more than 91 days in 2026, that means it's not met because it's an N test. They could have been present for 91 days, or I mean, more than 91 days in the prior years of assessments. But the fact that they weren't present in this current year for 91 for more than 91 days, that means already the test has failed, right? And it's also important to consider the 330-day rule in terms of non-residents, especially when considering the cessation of being a resident. And remember that part of a day is actually a day. And a day in transit is not a day. So basically, a day in transit is when they're just traveling through the Republic without formally entering or exiting the country. It does not count. And in terms of your calculator, take note that the calculator to calculate the number of days that have elapsed. Okay. Also, why does residency matter? Because it's our form. This is how we tax those different taxpayers. How we tax a non-resident and how we tax a resident are two different things. As you know, for residents, we tax them on worldwide receipts and accruals. Whereas for non-residents, we tax them on source-based income and accruals, right? As well as exemptions. We need to know which exemptions apply to them or not, and certain exemptions don't necessarily apply to them. Section 10(1)(h) is for a non-resident and it's for interest, if I'm not mistaken. And that also has its own rules, as well as withholding taxes, right? Because there needs to be certain withholding taxes for whatever non-residents do in our country, as well as we need to consider the branches, other taxpayers, and connected persons. Okay, so for example, here, a royalty incurred by a South African resident, because remember, a resident can be a company or a person. So this is possibly a company, and it is paid to a non-resident, which is also most likely to be a natural person, but it can also be a company, right? So per normal tax, this royalty would be included in the gross income per Section 9, which is the source rules, and because it's source-based income, but also there is an exemption, right, to this inclusion, and there's also withholding taxes. Is there a double tax? Short answer, no. Why? Basically, there's no need for the person to file a report because it's income and then it's exempt and then it gives us zero. So there isn't any income that this person has gained because it was fully exempt. Okay, so things to remember from tax 2 is that you need to be comfortable with gross income and the specific inclusions, exemptions, deductions, and obviously case law. You will enjoy case law in third year and fourth year because you just need to know the principles. It doesn't matter whether it's Geldenhuys, Pyatt, Cattell or Cohen, as long as you know what the principle is and you apply that to the scenario, then you're good to go. And your deductions, you have your book, you have your legislation. So these should be flowy for you. Okay. So now we also need to ensure that you're comfortable with the general deduction formula and its relevant case law because it is frequently tested, and special deductions as well as Section 23 prohibited deductions. The main thing I would advise a second year student who is, or a new third year student, is to ensure that you highlight, flag everything that you did in second year the minute you get your legislation. That will save you time to know where things are and ease off from the memory, right? Your memory will still help you, but just knowing where everything is will help you navigate the legislation a bit better. Okay. So repairs deduction is also found in CGT. Okay, cool. It's in the base cost. Now, withholding tax discussion. Okay. So, withholding tax discussions, we first need to determine the resident status of this person, unless their status is given to you in a scenario. So, if it's given to you that the person is a resident of a country outside of the Republic in this way, then students must state in the solution that the person is a non-resident because it was given to you in the scenario, or yeah, in the scenario because they are a resident of this specific country. So you need to state Thabo is not a resident of South Africa because he is resident in the UK, for example, right? So for natural persons, we focus on ordinarily resident, which is our case law, or they need to meet the PPT test. For a company, we need to consider whether they are incorporated in South Africa or their place of effective management is within the Republic, right? So when a person is a non-resident, it will trigger withholding tax, but you need to consider normal tax consequences before jumping into withholding. So think about normal tax. What happens to this non-resident in terms of normal tax, and then consider, is there any withholding tax based on this transaction that they incurred, right? So cool. And then we also need to consider the resident status of the taxpayer. Okay, basically repeating all of that I've just said. What's new here? And then, yeah, we calculate the taxable income on normal tax payable. Okay, so step one, consider withholding tax and the applicable rates. Determine if this person is exempt from the withholding tax. And if not, state who has the liability and when payments should be made. Basically, this is section 49 in the sense of royalties, 49A, cap A, all the way to H. The nice thing about having the ledge or access to the ledge is that you can literally just follow all the sections in order and you'll maximize on your marks. Okay. But if you can see the steps, then do so. But most of the time, you can literally discuss what that section says from A to Z, and you will get all your marks, right? So if this person is exempt from withholding tax, always calculate the withholding tax and state that it will be exempt. Show the calculation still. So even if you can see from the get-go that this person is exempt from this whole withholding tax, so they don't need to pay this tax. You don't just say, okay, it's fine. Doesn't really matter. No, you need to show the marker that you understand that this person should not pay it, right? You should say, okay, they got 10 million and 10% is the rate. Now they need to pay, now 1 million needs to be withheld, but it is exempt. Okay, so therefore, now this person no longer has the liability to make payment, and there's no need for payment to be made because it is exempt. Okay, so whether or not this person pays it or not doesn't really matter. And also, your marks will show you whether this person will pay. Because if they need to pay, it's like an extra 2-3 marks. Whereas if they don't need to pay, you just calculate and say, nah, either way, this 1 million is exempt because this person is exempt from withholding tax. And remember, the final tax will be added to normal tax payable to get the total tax liability. But withholding tax on immovable property will reduce the non-resident's normal tax liability or normal tax payable. Therefore, always conclude on your discussion. Yeah, just wrap it up. Just find a way to wrap it up. And your conclusion is normally like a short sentence or one or two sentences wrapping up what you just did, especially in discussions. So like, okay, IPAC always work. What is the issue? What is the principle? And normally the principle doesn't necessarily have to be linked to case law. You can just say the principle is section 49 cap A. Okay. And then you apply where in 49 cap A. We'll say, okay, maybe the 49 determines the rate. So we'll say, okay, since this person is this, because they list for trusts, natural persons, companies, and the sorts. So, for example, for a natural person, it's 10%. SIPO is a natural person, therefore, 10% needs to be applied on the amount of royalties that SIPO received. Then you calculate your 10%, and then you go to the next part. That is the principle. Section 49 can be. SIPO is exempt. Therefore, SIPO won't need to pay the 1 million from the royalties that he received. And that's it, conclude. Therefore, SIPO will not have to pay withholding tax, or there shouldn't be any withholding tax on the royalties that SIPO received because he is exempt, right? And if so, you can conclude that therefore the company, the South African resident, is liable to make payment of the withholding tax. And when? Maybe a month after issuing the royalties, or whatever the case may be. So, yeah, that's how we normally discuss. I'll try and make an example soon just to show how to use IPAC, but IPAC will save your life, especially for tax, because there's always an issue. With every discussion, there's always an issue that you're solving. Okay? Can you pay capital gains tax on this? Capital gains, you use your principles. Always, always IPAC your discussions. Obviously, with the later years, especially in fourth year, there's no need to issue. But if it helps you structure your answer in the best way possible, stick to it. Stick to it. Because after all, tax is still a law, and we learned about IPAC from law. So please, I will end the video here and you can just quickly wrap your thoughts up. You can pause to copy down, make your own notes, and yeah, you can comment, like, and subscribe. And you can also reach out if you need lessons separately.